Well, hi folks, Stratman from Pitware.com here. Just in terms of assessing the market, if you see a situation like this where all your fractals have fired the opposite way to maybe just the H1, it may be worth going down to the H1 time frame and seeing where the previous fractal is that's got to be broken. It might have been because of a news item that it's a long way away and potentially counter trend trading at the moment. In other words, against this H1 fractal is quite appropriate. What I'm seeing here is that price action certainly on H1 is starting to turn back upwards, and if I go back through price action here, I'm looking for any candle that's had two either side of it lower. This one's ruled out because this one's kind of at the same level. This one can't be because that one's higher. This one can't be because that one's higher. So the previous H1 fractal is way up here. So you can see this massive long candle here due to news in the last session has caused this setup here. This fractal won't turn back to green until price action gets above here. So potentially this is still, we've got to consider that maybe we can't rely on that one just yet. So if we're waiting around for that to change, we could be waiting a long time. So we really need to be looking at our price action and taking the big picture into view. So the big picture is saying, look, we've had kind of like a bit of a wedge occurring here. I can see that on this time frame. I can see it here in more detail. I'll draw it for you. So I've got a series of highs here that have been hit on the way down. So there's my highs, 2, 3, 4 almost, and so that's been forming the top of that kind of wedge. And this one here has got 3 lows that touch this. So I've got a good wedge here, and price has broken out of that and come back and retested this and now continued on for a breakout. So potentially. Well, hi folks, Stratman here from Pitware.com. Just in assessing the market, sometimes you need to kind of just use a bit of common sense and consider what's going on. I mean, indicators are great, but you've got to use your eyes and look at price action and see for sure what the reality is. Like, look what I'm seeing right now. I'm seeing a break of the previous H4 and H1 candle. I mean, and it's significant. Yet, why is the H1 here still showing down and these are still showing up? What you really have to do is consider, well, maybe there was a big news item that occurred that's put this fractal way out of reach for the time being, and in fact we might need to be considering disregarding this particular one here. And if we look back on price action, where is the previous fractal here? Well, a fractal is a situation where a high is preceded by, or either side of it is 2 candles. So this here is a fractal at the top of that candle there. If we go down here, the next one, that could be a fractal. That one can't be because that's higher. And then there's no fractals here. This one here can't be because that candle there is higher. So price action's got to wait until it reaches either this point here or this point here to flick that the other way. So we've really got to take that into consideration. Now, as I said before, when we're looking at counter trend trading, my H1 is pointing pretty steeply up on the stochastics. We've broken this wedge formation that, well, I'll just draw that for you so that you can see what I'm talking about. I've got 3 hits here on the bottom of this wedge, and I've got 3 hits here at least on the top of this wedge. So there we go. And then price has broken through and retraced back here, which is what we expect. Then broken our H1 and H4 candle and continued on. And this is considered counter trend, yes, because faster moving average is below our slower moving average. So I'm looking at this thinking, well, I'm going to have to disregard this particular H1 fractal entry just based on this large move due to news, and you're going to have to do that sometimes. I've seen this break of, I know that price kind of consolidates or stalls at my SMA 60 moving averages, and I can see that quite clearly here, and then finally it's broken through there. I'm looking, like I always do, I don't like taking a trade based on the high. I want to take a trade based on a pullback. So potentially what I'd be doing is drawing a trend line here, price coming back to this, sitting on top of this moving average, and then trading away again. What that most likely will look like is a retracement of the M5 back to the SMA 60 on M5, and bouncing off that and continuing on. At the moment, it's too strongly going forward for me to consider taking this long right on the top of that move. I've got overbought seriously on the M1 stochastics. Prices trying to do a pullback now. I'm really oversold on my M5. I've got to wait for that pullback. Same as on my M15. I want to see this pullback. So all these I want to see pullback. I want to get in when price comes back to this moving average, comes back to this moving average, and then takes off again, showing that this is not a false break. Always considering that the overall trend has been down, so being mindful that if I draw another trend line on here, this one here in particular, so if this trend line here gets broken to the downside, I have to be cautious that this is now a continuation of the overall trend, which is the kind of move that I want to get into. But what would be stopping me from doing that? Well, I've got my moving average directly below me here, and that's going to keep me out if the distance down to this is quite short. And where do we see the distances? Well, the distances are here. So at the moment, this moving average here, which is equivalent to this one, the distance is minus 42 pips, but the one on this one here is minus 25 pips. So again, I'm always looking for space, distance to my moving average when I take a trade. This one's okay because there's about 40 pips. This one's got 20 pips, but by the time this comes back down and hits this line, if it breaks through this line, this is where some people might have decided to enter immediately on a break of that line, but not realizing that, well, you've got a consolidation point directly below that line. So if I drew that line up there, you can see that this candle could come down to here, and a break of that line would put us right on the M15 SMA 60. So I'm not going to go short just on a break of that line. So I'm just hoping you guys are understanding that you don't just take a break of the line. That's what we were learning on the way through, but now we've got all these other things in play to help us determine whether it's a good and wise thing to do. So for me right now, I would be more considering a counter trend trade, which is really a retracement back to here, and then a continuation basically of this trend line. So we just wait around, wait for the best opportunity to present itself, and then we go and grab it. And so there it goes, retracing back, bouncing off the M5 and the M15. So enter the trade, and we're going to get 5 pips, and we're going to exit. Notice I brought my stop to break even pretty quick. I started with a 5 pip stop. So there we go. You can counter trend trade against our normal trades and still make money. The Stratman, hopefully that is helpful once again. So just to clarify, very extremely risky going counter trend. Normally we would have traded short here, but remembering that the moving average was straight below us, that's why we didn't. In fact, I took a counter trend trade because we got a bounce off our SMA 60 on our 15 and M5, and plenty of room to trade on our H1.